Anthony Scaramucci, your new book, Hopping Over the Rabbit Hole, details how you started SkyBridge Capital. It's a $12 billion hedge fund firm. But before we talk about SkyBridge, I want to find out what's wrong with hedge funds right now. You had $28 billion yanked in the third quarter. What's going on there?
Listen, there's always a lagging effect on the redemptions, and so performance has been abysmal for the last 3 years for the industry, and so the loose holders of the industry are going to throw the towel in. And so my prediction is there'll be more redemptions next quarter and possibly the quarter after that. But what we both know is that a lot of people think we're in the investment business, but I sort of know we're in the fashion business. Things come in and out of cycles. And so hedge fund industry, I've seen 6 obituaries, Greg, in 28 years. This one seems to be a little bit more melodramatic, the obituary, and longer in length. But that industry is not going away. There's $3 trillion of assets in the industry for a reason. There's a group of very smart people that want a lower volatility return that they think can create alpha. And there's a large group of people in our industry that can create alpha. I do predict the fees will go lower if we stay in this low interest rate environment. But the assets for hedge funds in 5 years will be higher than they are today. That's my prediction.
Well, the other big trend within hedge funds is a move towards quant managers. You used to have a lot of gunslingers like Michael Steinhardt, Stevie Cohen, but a lot of those have been scrutinized. I mean, Bill Ackman, the latest one, he's an activist. So do you expect this trend to continue?
That I actually think will continue because the Reg FD, all the different things about information and the flattening of information so that everybody can get it makes it harder for those guys to have that competitive edge. But I do predict that if Steve Cohen does decide to open up, and my prediction is that he will, he'll get hit with all the money that he could possibly want or need. And so as interest rates start to normalize and price discovery re-enters the markets, people will be writing about the return of the gunslingers, and so I think Steve will be one of those people.
Do you think any of this has to do with the move towards more indexing? So you're not just seeing money come out of hedge funds, you're seeing it come out of mutual funds into ETFs.
Yeah.
I mean, is stock picking dead?
Okay, so remember, we're always fighting the last war. And what worked in the last war, if you measure the last 7 years, passive indexing, ETFs, all those low-cost exposures have really worked, primarily because we're in a zero interest rate environment. But we're at the bottom of that cycle now. And so as rates start to normalize, Greg, my prediction is that people at thestreet.com are going to be writing about how money's flowing out of those products into more specific non-correlated products that take advantage of the dispersion. Right now, with no dispersion and very little non-correlation, those products do very well. What I fear is things like the Department of Labor mandates, where they're trying to push people and claim that it's fiduciary responsibility to push them into low-cost products. Anytime the government is moved to over-allocate into an industry, subprime, Community Investment Act in the 1970s, it ends in disaster. So I try to tell my clients, yes, there's a big role for that in your portfolio, but you should have a 5 to 15% slice in things like what we're doing.
Well, along those political lines, do you think that Wall Street has lost its swagger? And what I'm thinking about in particular is you essentially saw Washington, the government, Elizabeth Warren, push out John Stumpf, the head of a major bank. So who's going to stand up for Wall Street?
It's very hard to defend what happened at Wells Fargo. So let's say that that was an isolated case. And I understand why John had to leave. I respect him a great deal. But when you have that systemic of a problem, the manager gets fired. It's like if we're going 0-162 in baseball, manager's going to get fired. But more broadly, Wall Street has lost its swagger, okay? They've crushed Wall Street. They did this to Wall Street in the 1930s. FDR said that he relished the scorn of the bankers, all the people that lived in this area or worked in this area. And that's happening again today, and I predict it'll happen for another 10 or 15 years. It wasn't until Prescott Bush got elected senator from Connecticut that the renaissance of opinion for Wall Street and the banking community started. And that was like in the mid-50s. And so from 1929 to the mid-50s, you had Wall Street hatred. Then you went from 1955 to, let's say, 2000, where they were pretty popular, and you could get secretaries of Treasury like Paulson and Don Regan from Merrill Lynch. Elizabeth Warren, if there's a Democratic administration, over her dead body, she's going to allow somebody from Wall Street to be the Treasury Secretary. So there's a lot of unfairness and a lot of hatred that I think has to end, and I'm an unapologetic defender of Wall Street.
Well, you started your career at Goldman Sachs, and it's been fairly quiet on the Goldman Sachs front of late, and for a while they were getting a lot of the scorn. But I want to talk about your book, because you left Goldman Sachs, you started one firm, then you started SkyBridge. Talk about how this entrepreneurial venture was established.
Well, so, what I will start out, I try to say in the book, and I try to write a very real story, that if you're going to be an entrepreneur, you have to accept ups and downs, tribulations, self-consciousness, anxiety. I have a lucite block that I have to wear every night, Greg, because my teeth grind due to the stress. But I started my first business in '96, 20 years ago, like TheStreet.com. I sold that business in '01. It was an RIA with a small hedge fund. We sold it to Neuberger. Neuberger got sold into Lehman. You and I both have that shared experience. And then I left Lehman in '05 to start SkyBridge. It was going very well in the beginning. When the 2008 financial crisis came, we were calling the place no bridge. We were going from 400 million in assets to 200 million. And I really thought we were going to go out of business. And so I tried to describe, in hopping over the rabbit hole, the steps that we had to take, the adaptation, the pivot, the recognition of our shortcomings and failure, how to recreate the business, create the SALT conference, buy Citibank's alternative investment asset business, go on television. I'd never been on television before. Go on television to tell our story, and then buy a media asset like Wall Street Week to build a system of experience for our clients. And so I really try to tell an honest story, let young people out there know that these glamorized magazine articles about the perfection of entrepreneurs and everybody doing this beautiful 45-inch line doesn't really happen. You get a lot of bumps and scrapes along the way, and you have to hop over some rabbit holes.
Well, it's a great Wall Street story. Thanks for coming on and talking about it.
Thank you very much for having me.
And thank you for watching The Street.